You what, let's connect with the management of Polycab and take a look at their results. It was a good third quarter largely. We do have Inder Jaisinghani, who's the CMD, and Mr. Gandharv Tongia as well, who's the ED and CFO of the company, then joining us. Mr. Gandharv, I wanted to take the first question coming in to you because a good set of numbers is what you're looking at when it comes to the third quarter. Margins, in fact, have been pretty good. What led to this kind of growth that you've seen, and what kind of margin outlook do you then have going forward into this fourth quarter as well?
So this was the best quarter as far as third quarter is concerned in the history of the company. The 9-month performance, first time in the history of the company, we were able to record 15,000 crore of top line. You are right that EBITDA margin has also registered expansion, and it is slightly above than the guided range of EBITDA margin of 11 to 13%. As far as the next year is concerned, as you are aware, we had embarked on a transformational project, Project Leap in 2021, wherein we wanted to achieve 20,000 crore rupees of top line by fiscal 26. Having achieved that number already in the calendar year 2024, we are now embarking on another transformational project, Project Spring, wherein we believe that we will continue to grow at a rate which is going to be 1.5x of the industry growth rate, with EBITDA margin of a similar pattern of 11 to 13% cable and wire business. And the FMEG business, the EBITDA margin will expand over the next few years and should be able to achieve 8 to 10% of EBITDA margin in that particular business. So overall, the demand outlook, the growth, profitability, everything looks on the right trajectory, and we believe that we would be able to continue to grow and register good returns for our shareholders.
Good morning, gentlemen. This is Cheryl also joining in the conversation. So you all are guided for about a 20,000 crore rupee top line figure for FY26, but it seems achievable in FY25 itself, looks like it, with about 9 months of your FY25 numbers already crossing 15,000 crore rupees. So would you like to update your top line guidance? Are you updating it for FY26 now?
FY26, we will grow at least 15 to 16% of total. And demand is good because of all government projects are coming, private industry is growing, solar park is growing. So demand is good, and capacity also we are increasing continuously. And I think so that minimum will be 15 to 16%. We maybe grow more.
All right, then I wanted to also shift the focus then to the demand picture that is emerging. What do you see in the wires and cable segment? What do you also foresee in the FMEG segment then?
Also, demand is good. Basically, we are reaching every district day by day. It will take little time more, but I think so within coming 5 years, we'll capture maximum areas, maximum network of the India. And I think so we'll grow at least the 20 to 30% minimum per year. And it will going to grow with the even with profit and with the turnover.
Right. So I wanted to understand exactly in which segment are you actually seeing most of your demand coming in, given the fact that you have multiple segments that you function in?
As you are aware, broadly, we have 3 segments. Core is cable and wire, which contributes between 80 to 85%. There is a fair amount of demand because of government capex and uptick in private capex. FMEG, as Inder alluded a while back, we are comparatively a small player, and because of a lower base, we believe we'll continue to grow at a rate which is going to be 2x of the industry growth rate. And EPC is a tactical business. It's very small in the whole scheme of things, but we believe that that business will continue to grow at a decent pace. So overall, as I mentioned a while back, under Project Spring, across all the business segments, we believe that we will be able to grow at a rate which is going to be significantly better than the industry growth rate.
All right, then that's a growth picture, but I also wanted to talk about the pricing environment then, especially against the backdrop of raw material prices that are largely a little volatile at this point. So how are you seeing that? And in terms of the competitive intensity as well, what do you foresee when it comes to this as well?
So as you know, in general, in our industry, the changes in the metal prices and changes in the USD and our exchange rate are passed on to the end customer on a monthly rest, which is the pattern which industry is following since last several years. And we as one of the leading player, we are also following the same. We have been able to pass almost all the increases and movement in the cost to the end customer, and that is also getting reflected in our EBITDA margin, which is within the guided range of 11 to 13%, even for the current period.
Right. Can you also shed some light on your export business? Also, what's the outlook on the export business going ahead for your company?
Exports business is another promising area where we believe we can take the products from India to overseas market. We already have presence in almost 80 countries. In this particular quarter, we did almost 450 crore rupees of business, which is around 8% of our total top line. And we believe that in quarters to come, we should be able to take exports contribution top line to 10% or perhaps greater. It's a good profitable business, and we are strategically optimistic about its contribution to profitability as well as top line. And just to support exports as well as our cable and wire business, we intend to incur capex of between 6,000 to 8,000 crore rupees in next 5 years. And with these additional capacities, we believe we would be able to increase both the domestic as well as the exports business in periods to come.
Let's talk about your expansion plans as well. Any targets that you then have in mind for the next 5 years?
We are basically in cable wire, we are in top, and I think so we are going to be continued at the top position because we have a capacity, and with the demand, we got a good capacity and good relations, and I think so we'll grow with the same speed, and we want to be at top, and we will be top.
All right, then on that optimistic note, we'll let you go. Thank you so much, gentlemen, for joining us on ET Now to talk about the quarter gone by for Polycab, as well as talking about the future roadmap going ahead. Thank you so much for joining us, and all the best for the rest of the year. But with that,
if you like this video, then like, share and subscribe to ET Now.